This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Welcome to the Research Talks here on Stockbox with Alan Green on a Friday that's very nice where I am, but raining I think where you are, Alan, but I think you're feeling better than me. Maybe you can tell from my voice that I am a little bit under the weather with a seasonal cold. But apart from that, I'm all right. Had a busy week. How about you, Alan?
It's been a busy week, Mark, and yes, you're right. It is raining here. It's a bit miserable. Certainly after the day we had yesterday and the day before. It's not quite so nice, but you expect that at this time of year. And yes, I can imagine the venue that you went to last weekend, of course, and had and visited with many thousands of people. Of course, it's likely that you will pick up something, I think, in the current climate. So
one of the disadvantages of going to a big festival over a weekend, isn't it? You're mixing with lots of people, so you have to pay the price, unfortunately. Even though I was careful as I usually am. But it is a cold, it is not COVID, so that's okay.
That's the most important thing, yeah.
Indeed. We're going to cover a couple of new companies today. So Bluebird Merchant Ventures, we haven't spoken about them before, but I have interviewed Colin, the CEO, a couple of times recently, and they look like they're about to start ramping up operations there. And then China Nonferrous Gold as well, which I don't think we've covered before. So we've got a couple of new companies you're going to present the investment case for us, Alan. So you're starting with Bluebird.
Let's start with Bluebird. Yep. So Bluebird Merchant Ventures, epic code BMV. The year high, of course, for the stock has been 2.85 pence. The year low 1.1p, and we're somewhere between the two at the moment at 1.8. Well, as I speak, we're at 1.85p. So it's a market capitalization of about 13.2 million. And we've spoken about on many occasions about modern data mining techniques, the resources and technology that can now be applied to the mining industry, and of course the way that technology can be used to analyze historical mines and really generate a new lease of life in many cases from the existing resources there, or indeed discover from the existing veins that these veins in fact extend much further than the original mining operation had originally estimated. So that's exactly what Bluebird Merchant Ventures have done, BMV have done. They are primarily focused on two key projects in South Korea, and they have a third project in the Philippines, which I'll come to in a second. So in southern Korea, there are, in a fairly mountainous region, there are two silver and gold resources: the Kochang gold and silver mine and the Gubong mine. So these are sort of mines that were previously in production, certainly back previously between 1961 and 1975. The Kochang mine produced 110,000 ounces of gold and 5.9 ounces of silver, and that's between 1961 and 75. And of course, historical production, historical mining techniques, all well and good. And of course, at the time the mining was undertaken, the cost of the underlying asset, the gold and silver, wasn't particularly high. So of course, the reason a lot of these mines close is because when the gold or the silver or the commodity price drops, it becomes uneconomical to mine. So therefore activities cease. And then, of course, an opportunity can arise further on when you, in later years, when there are new techniques, new technology available to be able to revisit those mines, and of course mine potentially even more profitably than was done previously because of the technology that's available and what that technology can reveal, both on the existing asset and potentially an extension of the existing asset too. So Bluebird Merchant Ventures are all about that, creating value through mine rehabilitation, and they're seeking to put high-grade mines with a low capital outlay back into production. So with Kochang, the Kochang gold and silver mine, there is currently an estimated 116,000 ounces of grades between 2.5 and 4 grams per ton of gold. The workings for the existing mine extend to 2.5 kilometers, and these include the main, what's referred to as the main vein, the main gold vein, and the south vein, which is predominantly silver. So there is a non-JORC estimate at present of between 555 and 700,000 tons of ore, and a higher grading. But of course, really for the mining community to take these numbers seriously, it has to be brought into line. And as such, SRK, the consultancy group, are being hired to undertake further a review into each resource. So the second one is the Gabon mine, and this is a historical reserve. It's a bigger reserve. There's estimated to be 2.3 million tons at 7.3 grams per ton of gold. That equates to 555,299 ounces of gold. And across this area, there are 9 granted tenements, and these include 9 known veins with a strike length of some 1,500 meters, dipping down to approximately 1,800 meters. So it's the company estimates it will have to drill down to some 500 meters. And again, that non-JORC resource potential indicative of 1.3 million ounces of gold. So that's a pretty sizable number between the two. And with the application of new techniques to this mining process, it's estimated that this will be ramped up quite significantly. Previously, using old outdated techniques, this mine was producing 1 million ounces, or produced 1 million ounces of gold over its life. And with the work that's been done in scoping the mine out, following the existing veins that have been identified subsequent to that work, Bluebird Merchant Ventures, or BMV, estimate it will hugely improve the productivity from that. So before I bring the developments on these two mines up to date, just want to take a quick look at the third project, which is the Batangas project in the Philippines. The Batangas project does have a JORC compliant resource of 440,000 ounces of gold, and a maiden ore reserve of 128,000 ounces of gold, and that includes some silver credits. They've identified a high-grade region within the Batangas area. This is in the southern Philippines, and that's called Lobo. And most recently, BMV announced a joint venture with a Filipino company, which involves a free carry for BMV and a stage agreement on predefined goals. They've identified 5 key targets across what's estimated to be a strike area of some 15 kilometers. And worth bearing in mind that BMV has invested some $2 million to date in developing this, so they're very keen to see a return. So the board, as you point out at the start, Mark, you've interviewed the chief executive, Colin Patterson. Colin is an industry veteran, some 40 years experience. He's also chairman of Apex Mining, and is a member of the Australian Metallurgy Organization, and very well respected throughout the industry. Chairman, non-exec chair, is Jonathan Morley Kirk, formerly of Montague and SG Warburg Banking. He's also non-exec director himself on Cleantech Lithium, very well known within the industry. You have another non-exec director, Clive Sinclair Poulton, chairman of Agricola Resources, former chairman at Beowulf Mining, non-exec director at Morningstar Holdings, that's an ASX company, and he's also chief executive at Besant Resources. So again, very experienced team. Also includes executive director Charles Barkley, who's well experienced within the region, and Aidan Bishop, who's a technology entrepreneur. So, as I say, the most recent developments which have seen a lift in the share price. On February 7th, the company announced that joint venture I mentioned for the Batangas, Philippines project. A special purpose vehicle called Alpha Diggers has been set up, and that Alpha Diggers will take an initial 25%. There's a free carry for Bluebird Merchant over the period, and the exploration licenses were really recently extended for a further 2 years. So the company has plenty of opportunities, having defined those key 5 targets, or the key targets there. Got plenty of opportunity to undertake necessary work to get the project to the next stage and either confirm or expand on the existing JORC resource estimate of 440,000 ounces. Then on February 27th, so this is all within the last few weeks now, the company announced a scoping study at its South Korean projects, and the results of that scoping study revealed a net present value of, across the 2 projects, of $181 million and a post-tax internal rate of return of 111%. It's estimated that the 2 mines between them, once back up and running, will generate some $50 million per annum average free cash flow, which is pretty impressive. And when you set that against the market cap of BMV at the moment at just 13 million, I think that really, in the words of Colin Patterson, highlights the potential of this 13 million market cap company. The company is awaiting that there are what are required in South Korea temporary mountain use permits, TMUPs. They're awaiting the issue of those from the South Korean government. Once they have that, then it's all systems go. They can get the team on the ground there and undertake the additional work. So that's hugely exciting, and certainly between the 2, you've got these 2 historical mines that will be brought back into production. There is a lot of investor interest and a big appetite for this, and in fact that was really highlighted about a week ago when BMV announced that it raised 1.2 million to fund the development of these projects via SI Capital at 2p. So with the share price going 1.85p, investors, if they're quick, can actually get in and take advantage of the fact that the company is now fully funded to undertake the exploration work at the South Korea projects for less than the investors into the 1.2 million raise paid. So that always stands out to me as being very attractive. Of the 2, so Kochang and Gubong, Gubong is the larger mine, and it's estimated that that will generate 60,000 ounces per annum once it's fully restored back into production. With Kochang, it's a little further behind. They require a proof of concept program to be completed. Once that's completed, which won't cost a great deal, they then expect to ramp up production to 5,000 ounces per annum, then 12,000 ounces per annum. So at full production, we could be seeing between the 2 mines 72,000 ounces of gold per annum. And obviously, compared to where the current market capitalization is, we're going to be way ahead. Well, the valuation will be way ahead of where we are currently.
Excellent. Thank you, Alan, for that. I know when I spoke to Colin, he said if he can get a bar of gold for Christmas, it would be the best Christmas present ever. He's not Andrew, sorry, Colin, even the Colin, the CEO, a bar of gold before Christmas. Strikes me that Bluebird they've been around for a while, but they're just sort of renewing what's going on. They've recapitalized, as you say. They changed their broker. They've got the deal there with Batangas that's going to be that free carry on to someone else. So there's no cost for them, but also the upside. and the focus is going to be on the two mines in South Korea. So I think it's a good story to follow, and if they want to get that first bar of gold before Christmas, what a great thing to aim for. So
Yeah, absolutely. And I think the thing is, just to highlight the point I made at the outset, with 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 a strategy like this, given where miners are at the moment, and they're having a really tough time,
mm,
you want to remove as much of the risk element as possible, because there is risk in mining. Of course, you're searching for
mm,
something, and you have to use the techniques. You've already got, in this case, you've got existing mines, existing resources. Um, you're reapplying modern mining techniques to further develop the asset, revisit the asset. And as we're seeing, once you make a discovery like this, it was announced recently this week that Greatland Gold, of course, are expanding the resource on the Javieron asset. That's what tends to happen. You find a resource, and then you'll find that the strike goes off in a different direction to what was revealed by the
yeah.
initial exploration work. So of course the resource then expands. You've got an existing resource here. A lot of mining's been done, but there's still an awful lot of stuff in the ground. And as they've gone into the ground, they've seen the new veins. They've discovered the new veins. Mark goes up, and of course they've already got the existing infrastructure in place, which in some cases will require recommissioning. But it's a known entity. You know the processes and the steps you've got to go through to achieve that, and I think that's what makes it, really a very investable proposition.
Indeed. Well, thank you very much for that, Alan. So then let's talk about the other company. That's China Non-Ferrous.
Yeah, China Non-Ferrous Gold has been around for many years. In fact, if you go to the China Non-Ferrous Gold website, you can see this huge complex in this mountainous region. It's in Tajikistan. So this is a formerly, so investors that go back a few years will remember Chryso Resources. Chryso evolved into China Non-Ferrous Gold, and indeed some of the directors still at ECR Minerals, for instance. Trevor Davenport was very much involved with China Non-Ferrous Gold. Then, of course, with Craig Brown, who, of course, sadly died a couple of years ago, or a year and a half ago. So China Non-Ferrous Gold, CNG, is it's the 100% owner of the Pakut gold mining license and the gold mine in Tajikistan. Now, the share price of CNG has not had an easy run over the past year. Shares were trading at 3p and then fell away to they've traded as low as 1.2p. They did touch right at the start of a year ago that they briefly touched 7p, but they're just off the year low now, 1.2p, and with good reason, that I'll come on to shortly. But the board are pretty much all Chinese nationals. The chairman and non-exec is Mr. Yulixian, and he's the largest shareholder in the company, joined in July 2017, and it is well known within the industry. Mr. Zhang Kui, who's on all of the communications, joined China Non-Ferrous Metals also in July 2020, also a significant shareholder. And it's worth, I think, realizing that these guys that joined the board were issued shares way ahead of where the current share price is. I think it was somewhere between 15 and 20p per share. And of course, here we are now at 1.6p. So they have every reason to want to build this back up. And again, I mentioned risk just now with Bluebird Mining Ventures. This is an operating mine. The infrastructure is all there. In fact, that's very graphically illustrated on the website, which just shows this huge mining infrastructure stretching across the mountains. So China Non-Ferrous has a mining license in Tajikistan, and it's valid to November 2030. When it was initially set up, initial mine plan estimates estimated a processing capacity of 660,000 tons of ore, up to from 660,000 up to 1.3 million tons of oil per annum from 2017. And certainly that's been the case. The mine itself is located 120 kilometers northeast of Tajikistan's capital city of Dushanbe, and it's within what's referred to as the Tian Shan gold belt. And this gold belt is enormous. It extends from Uzbekistan through Tajikistan into Kyrgyzstan and Western China. It's many sort of thousands of miles, and this hosts multiple multi-million ounce gold deposits from various other mines. So it's a hugely productive region. But of course, being in China and being in that region, we tend to hear less about it. So of course, that's very much a factor in that. The reserves of Packrat in total are estimated to be 1.2 million ounces of gold at a half gram per ton cutoff. The mine, of course, went into production some years ago. September last year, China Nonferrous announced a half-year report which revealed they processed 302,590 tons of ore. They extracted 302,590 tons of ore. 274,000 tons were processed at 2.5 grams per ton, yielding 16,330 ounces of gold ingots, which have been poured. These ingots were then sold, generating revenues of $30.7 million and an operating profit of $4.9 million. Now, there is some debt with the company, and that debt is primarily as a result of loans that were taken out to refinance operations following COVID, because of course COVID shut everything down. No work, no production could take place, and of course that impacted heavily on the valuation of the company. And that's why if you look at the historic share price, you'll see, say, over the past 5 years, shares were trading between 15 and 20p, where I mentioned the directors were issued those shares, and it's come steadily down since that point. So the value is there. The value is there in the ground. In February 2023, it was hit again. A big avalanche, because it's in the mountains there. An avalanche stopped production at the Packrat mine. And then just yesterday, I think the company announced that electric power supply had been re-established, production had been restarted, but the smelting process, due to some of the roads still being difficult to pass through for the lorries carrying the ore, smelting as a result, that will restart at the end of March, so a few weeks away. But at the same time, the company SRK, the consultants SRK, were engaged to review and update the resource estimate at the China Nonferrous, for China Nonferrous across the Packrat gold mining license. So if there is an upgrade, then hopefully utilizing those modern data analysis techniques, then we're going to see a big increase in the reserves, or the gold reserves at Packrat. And also, if the company is able to do that, of course, it will then mean it can continue to pay down the loans it had to take out following COVID to restructure the business. But I think, again, when you've got something that's producing like this, and steadily producing gold, pouring gold, selling gold into the market, as I said, $30 million generated September last year. I think you've got a company, the company's worth now just 6 million sterling, listed on the London market, which is crazy. I think there's no premium in there for an increase in production or an increase in the resource estimate. So I fully expect to see that valuation gap redressed as we go forward into 2023.
Excellent. Well, thank you very much, Alan. Of course, as I say, that's the first time we've spoken about that company, so it's good to get an introduction into China Nonferrous Gold. And it sounds like a very compelling investment case. So thank you for presenting that. So I think we are sort of done for the week, aren't we? Well, thank you very much, Alan. So we'll catch up again next week. If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.